Okay, very good morning to everyone. It's Thursday, the 8th of March. I can see Ilya in the chat already pumped for Draghi. So yeah, that's going to be one of the main topics we're going to talk about in the briefing this morning. Obviously we'll analyse and prepare for that in a lot more thorough detail ahead of the event, but to give you a bit of an overview, I'll talk about the ECB and what people are expecting, and kind of how to tackle that event in summary. And then we'll also have an update as well on Trump and the trade talks. That's pretty much the most dominant kind of theme of the last couple of trading sessions. And then I'll hand you over to Sam and he can look at the charts from a technical perspective as per usual. So one thing is, just looking at the charts this morning, and everything is pretty flat overall. And this is quite typical. You've had the market kind of a bit of calm restored after the resignation of Cohn yesterday, and so that in combination with some latest news about Donald Trump showing signs of some softening of the stance, well, maybe not him himself, but certainly the administration. You've had a couple of data points to be aware of, and then everyone's looking forward now to the ECB, which of course is that two-part event, the interest rate 12:45 and then the press conference with Draghi at 1:30. So typically when it's like this, when you have a big bout of volatility, as we did do with the big gap down in stock futures yesterday on the resignation of Cohn, as the market has recovered, you tend to have big periods of volatility followed by then a recovery and typically low levels of volatility. And then forward looking to a big event, people were kind of reluctant to take on fresh positions without hearing now from Draghi himself to get a better idea of kind of policy direction and thinking of the ECB going forward. So it could well be a relatively quiet morning. And so when Sam comes on in a second, I definitely would be paying attention to the levels he's looking at. He was talking to me about a really strong level in the DAX, which has really been very significant in the last couple of days. So I'll leave that for him to go into in more detail. But what exactly is happening with Trump then? If you remember this time yesterday, I was showing you the evil eyes of Gary Cohn looking at Trump and kind of laser stare in the back of his head. And now look at these two, best buddies again. And obviously this isn't exactly the case. Gary Cohn obviously is left now, but to give you an idea, well, let me read you the news first and then I'll give you my opinion of what I think. So the Trump administration have showed signs of softening its plans for sweeping new tariffs on steel and aluminium. So last night, White House officials raised the possibility that Canada and Mexico and other countries could be excluded. So obviously Gary Cohn not kind of falling into the line of being a yes man. They've had a bit of a bumpy relationship really ever since the Jacksonville situation several months ago. And this in combination with leading corporate lobbyists and protectionist measures that could technically, the overwhelming opinion is this would slow economic growth in the US, so have spoken out quite vehemently against Trump's initial proposals. But Peter Navarro, a top trade advisor to Trump, told Fox Business last night the president would sign basically a bill that would see the tariffs go into effect in 15 to 30 days. So definitely we haven't heard the end of this, and we're going to have to be looking out for this for more colour later on this afternoon for sure. It's probably going to be one of the more meaningful events of the trading session today. But Peter Navarro did say, he said it would include provisions exempting Canada and Mexico, at least temporarily, from the tariffs. If you remember, these are the two which very, very dependent on exporting of particularly steel and aluminium. I think for Canada it's something like 88 and 83% of those two products go across the border into their neighbouring country. It's absolutely pivotal for their economy that these things continue to remain in play. And so what Navarro said is that they could get exemptions, those two countries, in efforts so they can renegotiate the NAFTA agreement. He also, though, and importantly, raised the possibility of European and other allies also being excluded. Wilbur Ross, the Commerce Secretary, adding, there's quite a bit of flexibility in dealing with the UK and other countries. So all of a sudden, we've gone from the bull in the china shop, boom, here we go, the whole world's going to suffer, make America great. And then in comes the crisis protection team, and they start to pull back a little bit of the aggressive stance. Now, I don't want to read into it too much, but I do like Trump's tactics in terms of from a political perspective. He remains, it's almost like, he's managed the kind of interpretation of the way he is quite cleverly, and that he can be very far-reaching in what he says, have very minimal impact overall on the market in terms of how they're acting to single tweets in that respect and single off-the-cuff comments. And then his team comes in and actually manages the situation for market participants. So what he's actually achieving here is that he's appealing to the electorate that got him into the White House, particularly the Rust Belt at the moment with this whole kind of steel and aluminium and trade talk. And then his team come in, he remains of that stance, so he remains politically popular of that view, and then they come in and address the situation to restore calm and confidence back into market prices. So yeah, it's a pretty fluid situation. Obviously it had sparked some volatility earlier in the week, but such is, as we were kind of saying at the beginning, what Trump says in phase one comparative to the various phases of negotiation and then implementation is completely two different things. If you remember corporate tax, although he's managed to get that over the line, which was an incredibly important thing because he had really struggled with a lot of the other implementation of his quite far-reaching proposals. One of the things was when he first brought about corporate tax, he said he was going to cut it to 12%. 12% became 15%, got agreed at 21%. So it's going to be interesting to see how this plays out. But I think this is just kind of classic political posturing Trump style to keep him popular with the people that have been backing him ever since day one. And I think it's a pretty viable tactic in that sense. As long as the market can continue to respond accordingly to when people like Wilbur Ross, Stephen Mnuchin, Peter Navarro come out and can kind of rebalance market sentiment in that sense. Okay, so a few other things then before we get to the ECB, and I'm just going to quickly run through some of the headlines. Now, Australia, not going to dwell on too much because it really hasn't had too much of a lasting impact on the Aussie currency. But the Australian trade balance beat estimates and returns to a surplus, with major export sectors showing gains while most import segments posted falls. But again, no real lasting impacts on the Aussie. Likewise, you might have picked up this comment. We did have some German data at 7 AM this morning. German industrial orders was minus 3.9%. Expectations were for minus 1.9%. So quite a bit weaker than expected data. However, as you look on your charts, absolutely no real reaction. And that's quite typical. Actually, the German industrial order data set is probably, of all the German economic indicators, the most volatile in terms of statistical kind of variance month to month, quarter to quarter. The other thing is that quite a few analysts are looking at the fact that this is January data, so it is quite backward looking, and also January does have the seasonal effect that actually it probably accounts for the period of the first week of January. Most people are off work anyway, so things like industrial orders typically on a seasonal basis are fairly weak, and so you can kind of explain some of that pattern in that respect. So markets have not reacted to this, but just making you aware of the data this morning. And then overnight you did have some trade data coming out of China, and quite impressively China's exports grew at the fastest pace in 2 years, even in spite of the long Lunar New Year holiday, pulling the country's trade surplus back up from a recent dip. So very strong data coming out on the export front for China, but again the market's kind of a little bit disinterested from the assets that we're looking at here this morning, and as I said, for the charts, most markets remain relatively flat at the moment. That takes us on then into the day ahead, and this morning is relatively quiet. There's nothing really too much of significance. We get some of the other more marginal, I would say, jobs data in the US in the run-up to non-farm payrolls tomorrow, Challenger layoffs, I don't think I've ever seen challenger layoffs move the market in my 12 years of kind of watching prices. So I don't think you've really got to be too phased by that in your strategies that you're making this morning. But really, at that time, no one's going to really care either, because attention's going to turn firmly to the ECB. Now, actually, the 12:45 part of the ECB press conference could actually be quite interesting. And this is not to do at all about the changing of interest rates. So again, for the newer guys, as you know, there's obviously three main benchmark kind of interest rates. The marginal lending, the refi rate and deposit rate. We're not expecting any change of that. But if you remember, at 12:45, the ECB do release a short statement which does include some specific sentences about the parameters of which they will continue doing their quantitative easing purchases. Now, if I quickly jump over to this, I did send you out this report in your morning research this morning. Just a quick word on ING's research. Now, this is a one page, and you are completely prepped for the ECB. Now, I had a look at some of the other major investment bank research reports of the ECB this morning, and I think the longest one I saw was an ECB preview that was knocking on 50 pages. Now, that's fine in terms of if you want every single nuance and complexity to trade some quite, instead of outright positions like we're trading, some more complex positioning in that sense. But for what you guys need, the reason why I think this is really good, particularly when you're kind of learning about monetary policy and how to tackle these events, it's just really nice and simple, and it's simplicity that's key at the beginning to kind of interpret this type of information. The really good thing that I like, of course, about what ING do, and you would have seen this, Sam shared it this morning, a scenario analysis table. Now, there's one consideration here. This is just ING's view. So this is just one bank and one analyst team's perspective. But generally speaking, the narrative of the base case comparative to the dovish and hawkish scenarios are generally in fitting of what markets are looking for. The really interesting thing about this table, though, is that you get the breakdown of the explicit word changes that you could look out for on the four key metrics: inflation, growth, the reference to the still relatively elevated in historical context euro-dollar rate, and then QE taper guidance. Now, the reason why I said 12:45 could be interesting is because that short sentence that they write about the conditions of what will be QE and how will it end comes in that first statement. And so at the moment, the ECB stands ready to increase QE in size and or the duration. That's the, as defined by these orange writing at the top, the current language being used. So what would be deemed dovish in this sense is they just keep the same, because the base case scenario is actually they start to omit that particular phrase and slightly tweak it to say that all options or all tools are available. So they're not saying that QE is not available, but they've removed the explicit nature of mentioning it specifically. Now, this is the subtleties that traders will look for in order to trade these types of events. The more hawkish scenario, let's say outright, they just say asset purchases are ending in September, full stop. If that happens, that euro is going to move substantially, and most likely the DAX is going to come under some severe selling pressure. Yields are going to rise, bunds are going to fall sharply. Highly unlikely that the ECB at this point are going to be so explicit and also pre-commit to a specific date. No way they're going to do that, I would say, from my opinion. So if that happened, I'd be looking for huge moves to occur in these European assets, because I think there's very low probability of that happening. Going back to the calendar, though, that's just part one. And of course, then we move to part two, which is ECB's President Mario Draghi has the press conference. And really, this is where the action really comes. Now, you do get the jobless data, and there's some other data coming out at 1:30, Canadian building permits, but the market's going to be focused on when Draghi begins. So going back to the crib sheet again, this is when we start looking for now his commentary in the statement and his answers to the questions with the audience in attendance of the press conference. Particular focus on inflation and growth this time, because this meeting is key, because not only do we get him talking about his assessment of the economy, we get the quarterly rotations, or the semi-annual in this case, the latest ECB staff projections. So this is when they'll outline their expectations forward-looking for what they see for inflation and GDP. What traders will look at is there any meaningful change in their forecasts for inflation or GDP? By this, what will happen is if they upgrade inflation forecasts, hypothetically, this is them getting more hawkish. This brings about then the possibility of tightening happening more quickly. As a net response, then you see euro appreciation, yields would move higher, and so on and so forth. In terms of these projections, changes are widely expected to be particularly minor to potentially non-existent, with information since the previous forecast unlikely to provide much incentive for the bank to make any major adjustments. Now, a couple of things here to be aware of when the ECB starts speaking is source reports. Now, you've all kind of gone through the lectures that I deliver about how monetary policy is communicated through really two distinct different channels. You have the official channel, which is ECB speeches, press conferences, very well telegraphed and scheduled delivered announcements. Then you have ECB sources. Now, this isn't to get confused with it's just someone guessing what they're thinking. This is informed people, unidentified, who purposefully speak to people like Bloomberg and Reuters to drip feed into the market what it is that the ECB are thinking. So without committing themselves, the ECB is indirectly then letting the market accustom and reposition itself for any potential decision changes. Because if you remember, central banks' main priority is price stability. They want to avert volatility in that sense. So what have the recent source comments said? Well, in the immediate aftermath of the previous meeting, source reports revealed the ECB rate setters were split about the next move at the euros, as the euro's rise has complicated the outlook. Now, the euro-dollar pair has been relatively static, so is there any reason for them to change from that stance? It's going to be interesting. Most pertinent, though, of the sources for the March meeting, i.e. today, came just last week. ECB policymakers seem to be unlikely to signal a policy shift this time round, but could discuss a dropping of their current easing bias. So this is where then this idea that this QE reference might be omitted this time round. But overall, the ECB, no way are they going to start talking up super hawkish. The sources have suggested that they're unlikely, other than that, to signal a real distinct policy shift at this point in time. Most people have thought, or the consensus is, that's going to come at the next kind of in 3 months' time in June, when they're going to be more explicit in that regard. Recent ECB rhetoric, Draghi highlighted last week that inflation is yet to show more convincing signs of sustained upward adjustment, while the euro area economy is expanding robustly. So still fairly benign inflation, but growth is picking up. So on those revisions to the projections, do we see that reflected, i.e. growth expectations may be bumped a little higher? The economic data, though, Q4 GDP figures were basically in line from the Eurozone, and in fact, Eurozone CPI came in a little bit lower, 1.2% from 1.3% during the month of February, with core measures also relatively uninspiring. So in that sense, are we going to really see much measurement? And can the ECB even become hawkish under those conditions where the economic data and inflation doesn't really warrant it? Three other things, and then I'll wrap up with the ECB. The three key areas that you really need to listen out for with the ECB today are trade wars. How much of what's now come about, don't forget, the stance is softened already. But EU's Juncker said at the weekend to Trump's initial comments, if you do this, we're going to retaliate. This would be both economically negative for both sides of the party if it were to go to the point of implementation. How much do these trade wars, or does the Central Bank of Europe foresee this impeding then their ability for the economy to continue on the improvements that it's currently seeing? And so, again, another reason for them to delay and put off until there's more clarity on what happens with the trade situation from tightening policy right here, right now. The other thing, of course, political uncertainty. Germany now has some kind of stabilization because the government has been agreed and signed off with the SPD and Merkel's party. But the Italian elections, no doubt in the Q&A he will be asked about this, and does this alter his view and assessment of terms of monetary policy, having to manage the political uncertainty emanating out of Italy. And then finally, the really key one, the euro exchange rate and the wording surrounding that. So if we go back to our ING table, the current phrasing, volatility in exchange rate is a source of uncertainty. Now, the base case is that this remains the same. So what could be a hawkish signal and what could be a dovish signal? Well, if he says the euro level is not a concern at the governing council, that's giving the green light that, well, this euro can go way higher and it's not going to affect the way that they're thinking. So this would be an absolute party for the euro bulls if that comment was to be uttered by the president. The opposite side of that, if he changes going it's a source of uncertainty and starts going, oh, actually unwarranted tightening of monetary conditions because the euro is so high, that means then this is particularly dovish and you'd be looking for the reverse effect. So preparation is key, and having this in front of you, either printed out or on a screen, is definitely going to be useful to navigate the words, because it's quite a fluid and volatile situation when you're trading a press conference, but one that even if you're not looking to actively trade it and you're a new trader, I 100% suggest that you watch it and listen live. It's the only way you're ever going to be able to get more intuitive and understand the kind of language of monetary policy when it's delivered live. All right, that's it from me. Let me hand you over to Sam, and then he can talk over the charts. But have a good day. We'll talk ECB more later.
Yeah, just before the ECB at 12:45 and then 1:30, I put a few more charts in the chat just in case things do develop either way. And I think it's probably, just talking with a few of the guys earlier about what it's likely to be like this morning. It probably is going to be relatively slow. I mean, you are just seeing the euro just push down here, briefly below its low. You've got yesterday's low, which worked very well with the pivot actually yesterday, just sort of capping any potential downside for now. Just going to put it quickly on a 60-minute time frame, and you can see over the last few trading days we've been sort of ranging higher, albeit with a couple of pullbacks here and there. Let me just mark up. I think the key area to the upside, obviously that spike we had above the R1 and higher the day yesterday, and the key areas of the downside which really sort of pushed the move higher on the Tuesday, so around this sort of point, would be if we were to get a continuation of any move to the downside. I feel that's going to definitely cap it before 12:45, but I don't think we'll get anywhere near there for now. So really what I'll do is come on closer to the time, 12:45, 1:30, and talk a bit more about the euro charts in general. Just before I came on, you see here the pound is pushing below the pivot level, hitting that low of the day, coming back to exactly where it was, sort of stuck within that range. Not the worst place actually to perhaps look for a bit of a range trade. The level I like the look of here in the pound, and let me just mark this up with a trend line. You can see it's been respected quite well for now. This is roughly drawn trend line. It's not exactly on that level, but you can see the picture here of the high of the day. Tuesday's high, and then back on the 27th, just getting squeezed into the upside. You can see probably got quite a nice trend line from the upside as well. Marks up today with not far off S1, and perhaps this low that we made yesterday afternoon. That could be a good place perhaps to look for a bit of a range trade actually. I quite like the look of that whole area, potentially to the downside if we were to push lower around 138.80 on the futures. Again, looks quite good, as you can see that yesterday was where we really pushed on to have another test of those highs that we made early on. So for the pound, perhaps just trying to wait for it to get away from this sort of pivot area for now. And I mean, to the upside, I'd like to see really a break of of that trend line and yesterday's highs, really. So it's in an area where perhaps I'd prefer to sort of stay out of that. We'll come on and talk about the DAX again though in more detail closer to the time, but as I mentioned there about this level, you see we talked about it a couple of times yesterday. Probably got a bit boring how many times we talked about it, but you can see again respected well over the last few hours. Let's lower the time frame down. You can see we've had a couple of tests of that not too long ago, so I keep an eye on it for sure. In terms of the pivot level, you've got a couple of other support points around there that I'd be aware of, but before that you've got this sort of double bottom area, but just pushing to a new low for the day there. Euro stock's not as interested in terms of testing its low. S&P, let me just put this on a longer time frame, clear up the chart a bit. I think, you know, it's once the momentum push sort of following that afternoon, you got a fill of that gap. It was quite a decent trade, and it seems that we are now looking to push to the upside. Of course, anything can happen really with the ECB, that maybe moves equities a bit, but let's just have a look where we got nice sort of trend line perhaps going from here using those highs. Doesn't really respect it too well. What about here from Tuesday? I think okay, yeah, that looks quite good, and you can see here, just lower that time frame down, the two highs that we made today and yesterday along with that high from Tuesday. I think a break of that could be quite interesting to the upside, and then you've got obviously targets probably really taking on that Tuesday high. That looks quite good from a technical point of view. The low of the day, low of the sort of overnight session, I'd keep an eye on that. You know, I do favour the upside, but if we were to get a technical break of this support, you can see we've already had a couple of tests of it. There could be a decent opportunity from a risk-reward point of view that sort of attracts this market perhaps down towards the pivot. So I'd be keeping an eye on that actually to see if we can perhaps get squeezed into the level of support that we made. Dow Jones, decent opportunity actually for Dow Jones, not only when it pushed above the sort of the gap if you like, but you can see how well this area of resistance acted on that trade there. So really nice opportunity. But now you can see actually we have, I guess, just broken through the overnight support, so we're keeping an eye on the S&P as well to see if that can sort of follow through. Nasdaq nowhere near as interested. You can see here actually closer to the high of the day than the lower part. Would look to get a trend line going on from the lows. Actually, you can see it's trending higher quite nicely. If I'll roughly draw that on. If we were to get a push in the others, it could drag down the Nasdaq as well. So I keep an eye on that break of the trend line to the downside. Again, you can use the previous lows as any sort of target areas going forward. Oil, which was a roller coaster yesterday to say the least. The pivot acted well once, twice, three times before coming down and dropping $2 at one point, and just almost coming to the lower level. Let's just lower that time frame down, and you can see here had 1, 2, 3 tests of this area. Breakthrough here. You've got a couple of targets from a few there. I'd look to take some off really around these points. So maybe not the best trade from a risk reward point of view, but from a technical perspective, you've had 1, 2, and we're just having that third test now. And let's just see if we can get a break of this level. Just gonna have a quick check over on what gasoline is doing. Yeah, so gasoline pushing through as well. So oil and gasoline just coming to their lows. I'm just going to move oil there to the side and bring gasoline into the picture here. Okay. RBE. Okay, so gasoline is pushing on. You can see just testing this level of support, similar to oil in that a bit of a support level from last night. So worth keeping an eye on here for oil. I know it's pretty early in terms of an extensive move, but if we do get perhaps a decent break, this support level that we're seeing at the moment could well turn to resistance for both of those. Have a quick look over at gold, GCE, just pushing lower as well. So commodity well, gold and oil anyway, just pushing a bit lower here, just through levels of support that they had overnight. Decent sort of downtrending day yesterday for gold, which is, you can see, you get this quite a bit, you know, hours after what was a level support, you break through, and if you don't really get a strong test back, it then comes and finds it later on, in this case this morning, and it's acted very well along with that pivot, so decent opportunity there. And I guess if you also want to get a trend line on this market from yesterday's low, it's the Asian session low, we have got a break of that as well, and you can see, if I just make this a bit clearer, there you can see a nice breakthrough of that. I know the trend line not perfectly drawn on, but you get the point there, breaks through, so that could be a point of resistance if we were to come back and test that as well. Quick look over Aussie dollar and the yen to wrap things up in terms of technical points where we could go to, having just broken through the pivot. From a range trade perspective, S1 looks pretty good, along with yesterday's lows. There you go, just coming to a potential point of support from that trend line. In terms of looking for a continuation of this move that we've seen, having broken through really the lows of the day, this 78.16 could be quite a nice place, especially if we start to get this trend line perhaps respected. But I keep an eye on 78.16 as a level of resistance to the upside. That range trade at S1 also looking quite good. Dollar yen having just pushed off that pivot quite nicely, again worth getting on a trend line using previous highs just to see if it starts to get respected around here. And then obviously by seeing that getting respected, if we do then get a breakthrough, you know, other people looking at it, and that's sort of what gives that move a bit more strength and purpose when it does actually break. So I'll be focusing on that. Obviously the pivot level had a good test, and then a couple of interesting support levels if we were to come down. But I'd have this trend line going on from Tuesday to today's highs just to see if we can start getting squeezed in. Any questions, please do get them in the chat, and like I said, I'll be posting a couple of different European related markets, so we'll have a look at the Bund, DAX, Eurostox and the Euro pairs as well, closer to 12.45. But just going back to the Euro, which as mentioned did just push a bit lower, just testing yesterday's low for now. Wouldn't expect necessarily the biggest move to come before the release later on. If I don't chat to you, have a good day.